Hey, very good morning. Happy Friday, the 17th of November. Hope everyone is well. Just to give you a quick overview of what we're going to cover here in the briefing, we've just had a keynote speech delivered from Mario Draghi, the head of the ECB. We'll have a quick recap of that. There's been a slight bid turn in the euro since the comments were released. A couple of things from late last night, US focused, and then we'll have a look at Brexit updates as well as a quick look at Bitcoin as well, given we breached a key psychological barrier on the upside last night. So starting off, let's just delve right into what's happened just now with the euro. We have seen a slight move higher upon the release of text from Mario Draghi. If I put this on a minute chart, you can just see the size of the move. We were fairly just drifting lower really since Europe's came into the market this morning. We've seen a moderate bid tone. In context, this is only about 10 pips, so it is an uptick, but it's not anything particularly massive. One of the things, just to recap with what I've done here and just to show you through the process, is that when you know Draghi is going to be speaking, what you can do, if the comments don't come out immediately on the kind of press wires and Twitter and so on, is just essentially refresh the ECB website, and you'll see, like when you get a text on your mobile phone, there's a number that appears here above the speech section. And so when that populates, which it does in real time at the turn of the hour to the second, you can hit speeches, and then you've got Mario Draghi's statement complete in its entirety right here. So again, while he is now live speaking on TV, you've got his exact text, if you like, of the entire speech that he's delivering. Normally the routine then being I generally scan through pretty quick, but jump to the conclusion to see what is there as a summary, if you like, of what the tone and text is. Then there are key points of which I look for. So quite often I'll do a Control F, for example, and look for inflation. And as you can see, there's 24 hits here, as you can see in the top right hand corner. And what I would do is I'd quickly run through just to see, is this the same as what they've said previously? And on the balance, actually, everything that's here is pretty similar to what's been said before. So granted, there has been a slight uptick, but the reason for it being a fairly mild move, if you like, is probably due to that fact that actually, from a communication point of view, as we would expect, given as well, like we saw that ECB forum on Tuesday in Brussels, there's no real need for them to really change tact of communication at this point, given the recent press conference, the dovish communication, with alongside, of course, the reduction of QE going into 2018. So that's the euro story. But jumping into a couple of other things, because first of all, the close on Wall Street last night, the S&P up 0.82%. Actually, it was the best day for the S&P since September the 11th. You know, kind of a multi-month high, if you like. The Nasdaq gained 1.3%. That's a fresh all-time high as far as the Nasdaq is concerned. One of the key things that happened yesterday, aside from other macro topics we'll discuss, is from a micro level. You did have, of course, Walmart, the dominant force on the high street, if you like, on the retail side, and they reported yesterday particularly strong numbers. In fact, strongest US sales in more than 8 years. If you remember, on the pre-market release, they did actually help lift the Dow future even before the cash market opened. And then certainly this time yesterday, we were looking at that chart, if you remember, from Bloomberg, and we were asking ourselves the question, is it buy the dip time, or is it the beginning of something a little bit more heavy in terms of selling pressure from these all-time elevated levels? And lo and behold, buy the dip won again. So I think this is the 6th consecutive day where essentially, I mean, yesterday was even more bullish actually, in fact, from what we typically see, because we open on Wall Street, as you can see here, just looking at the week in its entirety, and we just, from the open, shot higher. We got all the way up to what was its respective R2 on the day. We printed a high at 25.89.5, which of course is coming up towards the upper bound of the beginning of the month, where we printed, of course, up at towards 2600, the all-time highs. So looking at the setup of the S&P here today, certainly don't really see any reason to move away from this buy the dip mentality. As if you were reading our strategy report from yesterday, I was kind of talking about this. And really it's mid-December where I think that this is going to become much more of a potential risk for if there is going to be some sort of mild correction, i.e. some consistent selling pressure in these US equity markets. The point of that is probably going to come in mid-December, because there's a 1-2 day period in the middle of that month where you've got the US going to hit their debt ceiling, you've got the Fed are going to have their interest rate decision, and of course this comes with the next interest rate hike, summary of economic projections, and the press conference of Yellen. Then you've also got layered on with that as an external kind of situation is Brexit, and the EU summit is due. So until that time, I still feel more kind of comfortable that this buying the dip should maintain for the time being. I was just talking to Alex behind me this morning about how, in terms of a seasonal pattern, November typically tends to be a good month in terms of stock returns in the US, albeit the second half of November normally not quite as strong as the first, and we've obviously crossed over into that second half now. But approaching this S&P, I would still be more akin to trying to identify and pick levels on the downside to want to follow the trend back higher again. And so whether or not that would come at the overnight Asia Pac low at 25.80.5, or down at pivot here at 78, or what would be rounded up 25.79. But again, looking to find an entry point to then follow the move back higher, with the obvious target on the intraday today being the move back to the late evening highs that we printed up at 89.5 from yesterday. Now, one of the main things that's obviously helped here is yesterday evening we had some positive news on the corporate tax front, which I'm sure you've been reading this morning. But to recap what we've had and what the exact situation is this. So the House, and remember this is specifically just the House, has passed the tax bill in the first step toward the historic overhaul. The vote represents a key milestone in Trump's quest to cut taxes. The Senate is debating its own separate plan and faces those constraints. So a couple of points here to just recap. Deutsche kind of summarising quite nicely this morning. So the US tax reforms, this is a positive step, of course, because it's just one of the chambers of Congress is now agreed, if you like. But the bigger thing here is about the challenging task of getting the passage of the Senate's version, where fiscal constraints are tighter and the Republicans only have 52 of the 100 seats in the chamber. So it's right on the balance, and really you need Democrats to also come together. So there's got to be a lot more movement and compromise amongst the political parties in order to have such an agreement in the Senate. Arguably it's been more easier in the House in that respect. Deutsche Bank themselves, their US head economist, is saying believes there is a decent chance that some version of the tax reform can be achieved, but this is likely to be a Q1 event. And I agree with that assumption, although this is a positive and this will help continue this argument of supporting and buying the dip for now. Ultimately, I don't think that this tax reform in its entirety is going to be done anytime soon in the coming weeks. This is going to be more of a Q1 event. So short term though, it is a positive move, and definitely something which has helped support prices. The other thing that did happen overnight is this one, which you might have read about as well. This is talking about Mueller subpoenaed Trump campaign for more documents. So what this is looking at is special counsel served the President Donald Trump election campaign a subpoena in mid-October, according to two people familiar with the matter, a latest sign that his criminal investigation is aggressively pursuing links between campaign officials and Russia. So as a story, this is not new, because obviously Trump and the, let's say, relationship that he had pre-election and potential allegations of their involvement to assist the process of when he was going into the election race has been a story we've heard before many months ago. But one of the key things here is that this is a new kind of depth of investigation that's come to light. And obviously this Trump would have hoped to, it's kind of been put behind him, has come back to the forefront. And again, this starts to make people nervous about implementation risk and so on. So it's taken a little bit of the shine off of the House passing that bill last night. And actually what happened last night when this document started to circulate, which was about 1:30 a.m. or so overnight, was the dollar started to weaken. And this has been a classic kind of pattern, although Trump's not going to be impeached on the back of this, certainly a risk of that needs to be repriced slightly. And so what happens with the dollar weakness? Well, then this is when you get a very aggressive move seen overnight in both major currency pairs I've got up here in the top left of my charts. You can see, if I just highlight it for you, really these sections here, this is cable, this is euro dollar here in the far top left. So it's not so much of euro strength and sterling strength, it's more dollar weakness on the back of this report. Again though, be mindful the dollar has already recovered in the dollar index, albeit granted still down 0.25%. So as I said, this is probably reason to reprice some risk, but ultimately Trump has weathered far more aggressive storms against him in that respect. Okay, a few other things to quickly get you up to speed on as well. On the Brexit situation, this is the latest from David Davis, who's the Brexit Secretary, of course, for Britain. He said to wait a few more weeks for Brexit bill details. Now, if you remember, we were talking yesterday about the Sun newspaper sources talking about Theresa May is contemplating basically doubling the divorce fee in order to secure then a transitional deal in good time for then the EU summit, which is coming in approximately 4 weeks' time. But David Davis has kind of thrown a little bit of a spanner in the works, and actually probably more talking reality, to give him credit, is that actually it's going to be a few more weeks till we get to the point of when we can have a factual figure that we can put forward. Obviously the way the market tends to be responding to this is really the summit in 4 weeks' time is key. We either secure or don't secure a transitional deal. If we don't in that time, then obviously I think the market does need to reprice a little bit of more negative risks about the further delay to this process. The cable hasn't seen much of a reaction as yet though, and just looking at the sterling chart, we do remain somewhat supported by R1, at least for the moment. We broke through there on the dollar weakness on that special counsel investigation details into Trump and Russia overnight, so that was the push here. We've then found support in mid-Asia Pac session at R1. We've retested that briefly during the morning in Europe, and now we've kind of had a trading range since then between R1 and R2 in general terms. Looking at the trend though over the last couple of days for the sterling currency, it definitely has been on a progressive move higher, and certainly if we did push any higher, then this is the upper bound of the trading range that we were at, and levels that I'd be watching would be up and around this 133 handle, which of course was around the 26th of October highs, and then beyond there then you're looking more towards the higher bound of 133.38, and then the range high of the last 2 months of 133.63. One of the things then about this bill, this divorce fee, just quickly to show you a graphic that I saw this morning that I thought was quite useful. Let me just shrink my video feed so you can see it fully. There you go. So this is how Britain hopes to reduce the Brexit bill. So when we're going through this period of negotiations, what is it that they're negotiating? It isn't just a number and they all sit around a table and are throwing numbers out there. Actually, they go through line by line various different sections that makes up what would be called commitments or long-term liabilities or additional contingent liabilities. These are all factored then as a total figure as to what the divorce bill basically needs to be. And so this graphic is quite good because this is the starting point on the far left, and then this is the outcome on the far right, and then the period of which we're in the middle is the negotiation. And these are the key subjects of which are being negotiated, and then this is giving you the calculation of where Europe comes from in its figure of towards 100 billion. And then these are the different areas of which the FT's analysis is going through and saying where there's wiggle room essentially to negotiate down the figure, of which then as a final outcome comes to a final bill Xing out contingent liabilities of 32 billion, but putting those back on will still have to be guaranteed as part of the financial settlement. This is when you get to a figure of approximate around 44-45 billion. And I would say that that is pretty much the benchmark, I would say, expectation of what most market participants are expecting is going to need to be put forward to Europe in order for them then to accept and secure the transitional deal, of which David Davis was saying earlier would last for at least 2 years going forward, which is critical then for the medium long-term horizon for the UK. And so I'll post this into the chat later, but if you ever hear of specific points or sources are talking about or leaks on certain areas, it's quite a good graphic to give you an idea of the types of numbers associated with the individual parts of the process, so to speak, for them to get this number down from this kind of total 100 billion figure down towards something which is going to be more digestible from the British side in order to get this deal over the line. Okay, one other thing before we look at the calendar for today, I've got to talk about it. It's, of course, Bitcoin, because my word, what a rally. I mean, it's just phenomenal, really. Monday, we printed down to close to 5,500. Last night, we broke 8,000, or tested it at least on this chart. So it's just incredible. 30% move in basically 4 days. Again, I would say at these particular price points, as we've seen before, you can see how the market is responding to the 8,000 level. Already this morning I did have a quick check on the latest price, and it's actually dropped to about 7,500 again. So obviously the market tends to chase it up to the big psychological handles, books a bit of profit after kind of the objective has been hit. Then you might get the big hit when it goes through. We get a quick surge higher. Before then, the market, as a kind of function of profit taking, drops quite spectacularly, and then rallies again. So I'll just be keeping a very close eye on going forward. But certainly a continuation of quite a phenomenal market at the moment. Okay, quick look at the calendar, and then I'll wrap it up there, let you guys get on with the rest of the day. And actually, from a scheduled point of view, it's very quiet today. When you think about the calendar for this week, it's actually been quite interesting. There's been a fairly busy data calendar, Tuesday, Wednesday, Thursday, but much like Monday, it does die down quite a bit. There's nothing really coming out now this morning, now that Draghi has passed. You've got the afternoon building permits and housing starts. Again, the housing sector not so much of a focus in regards to federal thinking, so I'd classify this as much a lower ranking economic data from that perspective in terms of market impact. But you do have CPI data coming out of Canada, and the local currency, the loonie, does tend to be particularly responsive to economic data points. So maybe some of the live guys might want to have a look at that. That's coming out at 1:30. And then going forward, Baker Hughes could be quite interesting. I'm just trying to recall the actual figure, but I remember that we had the first large increase in rig or operational US rigs last week, which basically bucked the trend of decreasing rigs, where we got back down to the lowest level of rigs since May of this year. But then last week it jumped up, one of the biggest increases we've seen in many months. So that's going to be an interesting thing to watch going forward as well. I mean, in terms of the oil price this morning, just as a reminder, we have rolled contracts. So if you're looking at the futures, the front month is now January. But oil remains relatively elevated. I guess from a more broader macro perspective, if we're making some movement on the tax plan, this could be seen as a net positive, I guess, on the fiscal implementation side, which would be ultimately positive for US economic growth, and so supportive of that, of the demand side and the global economic kind of narrative of further growth. And so upside, I guess key level to watch today will be 55.82, because that is the range high that we printed yesterday afternoon. And if we were to break above there, then obviously it opens up potential for a run back on some of the selling pressure that was seen towards the beginning of the week when we had that bearish IEA report and some of the movement that we saw triggered by the technical breaks of those previous moves that we saw back on the beginning of the month. All right, going to leave it at that. Coming up to 9 o'clock, so have a good day. I'm going to be lecturing most of the afternoon, but hopefully Piers will be able to cover the mic for you this afternoon. So have a good one, and if I don't speak to you before then, enjoy your weekend. Thank you very much.